Hey everyone, welcome back to Corporate Decoder. Today, Vista Credit Strategic Lending Corp just filed an 8K and I'm seeing a very specific type of transaction that you need to understand. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing tells us about new shares being sold without being registered to the public and the price they got for them. Alright, so what we have here is a current report from Vista Credit Strategic Lending Corp filed on the 22nd of July 2026. These 8K filings are usually for really important stuff that needs to be disclosed to investors right away. The earliest event reported here happened around the 22nd of July 2026. The most interesting part of this filing is under item 3.02. This section talks about unregistered sales of equity securities. Basically, the company sold stock, but they did not go through the usual public registration process. This usually happens when a company sells shares directly to a limited number of investors, often private placements. The company started selling shares back on the 1st of July 2026, and the exact number of shares and the final details were locked in on the 22nd of July. They sold over 150,000 shares of their Class I common stock. Now, you might wonder why so many decimal places for shares. This often happens when dealing with things like dividend reinvestment plans or share class conversions where fractional shares can be created. They also sold nearly 8,000 shares of Class S common stock, and for all these shares they raised a total of $3,029,800. These sales were done through what are called subscription agreements. Investors agree to buy a certain amount of stock, and the company agrees to issue it. The important thing here is that these issuances are exempt from the usual registration requirements of the Securities Act. This is typically done under Section C of the Securities Act, or Regulation D or Regulation S. That means they believe they are selling to sophisticated investors who don't need the full protections of public registration. The company essentially took the word of the investors. They made sure the investors were either what is called an accredited investor, meaning they meet certain income or net worth requirements, or they were not considered a US person under Regulation S, which typically means they are outside the United States. This is standard practice for these types of private placements. This method allows companies to raise capital quickly without the lengthy and expensive process of registering with the CC for public offerings. Now moving on to another section, item 8.01, which covers other events. This part gives us some insight into the company's financial health as of a slightly earlier date, the 30th of June 2026. Here is a key number for companies like this that invest in different assets than net asset value or NAV. Per S-Hair was $19.13 for each class of common stock. NAV is a really important metric for investment companies. It is essentially the total value of the company's assets minus its liabilities divided by the number of outstanding shares. It is like a snapshot of the company's intrinsic value. It is also important to note that this NAV is a preliminary estimate prepared by management, and it hasn't been audited or reviewed by their independent accountants yet. This is common for interim periods, but something to keep in mind. At the end of June, Vista Credit Strategic Lending Corp had a massive $2.2 billion in total investments at their fair market value, plus unfunded investment commitments. Unfunded commitments are basically promises the company has made to invest in future deals. On top of that, their debt to equity ratio was 1.05 times. This means for every dollar of equity they have $1.05 in debt. A ratio above 1.0 generally indicates that a company is using more debt than equity to finance its operations, which can increase risk, but also magnify returns if things go well. So what does all this tell us? First, Vista Credit Strategic Lending Corp is actively raising capital. The unregistered sales suggest they are finding investors willing to put money into the company directly. This can be a faster way to get funds compared to a public offering. The NAV of $19.13 per S-Hair gives us a benchmark for the company's underlying value. When they sell shares in a private placement, it is crucial to see if the price they are getting is close to their NAV. In this case, the total raised was about $3 million for over 158,000 shares. If we do some rough math, $3 million divided by 158,000 shares is roughly $19. This means they sold the shares at a price very close to their NAV, which is generally a positive sign. It suggests they are not significantly diluting existing shareholders by selling new shares at a discount. The $2.2 billion in investments and a debt to equity ratio of 1.05x shows a company of considerable size and leverage. Large investment portfolios are common for credit lending companies. The leverage means they are using borrowed money to amplify their investments, which carries greater risk but also the potential for higher profits. For a company like this, managing that debt and ensuring their investments perform well is absolutely critical. What I am watching here is how this new capital influences their investment strategy and overall growth. The fact that they are consistently raising funds through private placements indicates continued investor confidence in their particular lending strategy. However, the debt-to-equity ratio is something to monitor closely. A key risk for any leveraged company is a downturn in the market, or if their investments don't perform as expected, as this could put significant pressure on their ability to service their debt. The risk I am watching is how they manage their leverage as they continue to grow their investment portfolio. My biggest concern is that increased leverage amplifies losses just as much as it amplifies gains. What I am actually looking for is to see if they can maintain or grow their NAV per share with this new capital and manageable debt levels. Alright, that is my take. Stay decoded. If you like this breakdown, make sure to like and subscribe. You can also join our Discord community linked in the description.